The Indian market opens higher, tracking bullish global cues. Mid-caps are the best performers, all sectoral indices in the green.
TVS Motor zooms more than 3.5%. Brokerage raised the target after better than expected Q1 performance.
Lupin reports a top-down beat in the first quarter. Margin comes in at a multi-quarter high with overall growth led by US and India. The management says they're on track for strong growth and improved margin. Stock up nearly 5%.
PI Industries climbs more than 2% after delivering a strong set of numbers for the first quarter. The performance was led by margin improvement. The company maintains its guidance of 15% revenue growth with sustained improvement in profits.
It was a soft quarter for Bata. The company saw a decline in revenue owing to weak consumer sentiment. Higher employee costs also weigh in on the EBITDA. Stock down 5%.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangala Malu. And as we speak, well, the markets are trading well in the green. We're up close to around 300 points, virtually at the high point of the day. At some point of time, it appeared that we were giving away some part of that advantage, but that dip has got bought into. Keep an eye out on Hindustan Zinc. We have some crucial flashes that are up for you on the screen, so we should get that up. We understand from sources that the OFS, Hindustan Zinc OFS, is back on the table. The government of India, remember, they hold close to around 30% stake in the company. So that OFS is something that you awaited. At current prices, 630 rupees, well, the stock is rather expensive because the float is very, very limited. Now, we'll have to see what kind of a discount do they come to sell the stake of, of the government, and how much do they sell as well. Because as of now, 65% is with Vedanta and 30% stake is with the government of India. So we'll have to see what quantum, what price do they come at, and what kind of appetite is there as well. This is going to be important. And whether or not we do get the promoter entity, which is Vedanta, that participates in that OFS as well. Interesting times, but we'll try to get Sapna to give us the latest on that particular news flow.
Take that point, Nigel. It's been on the table or on discussions for a very long time. It's one of those things that keeps, coming along every once a while. But now, if, Sapna's got the news from her correspondent sources, etc. If it's likely before FY25, then that'll be a big positive. We'll keep an eye out on this development as it progresses as well. But for now, let's talk about a couple of earnings that we have. Indigo Paints, the company posted a revenue growth of nearly 8% in the first quarter on a year-on-year basis. It's a lot better than its competitors, the likes of Asian Paints, Kansai Nerolac. The industry actually saw a decline of about 1.5%. But this time around, as we've seen with Indigo Paints for the last many quarters, they've actually outpaced the industry. The reason why the stock is lower perhaps could be on account of lower net profit and lower margins as well. What's the way forward on everything? We have with us Hemant Jalan, who's the CMD of the company, joining in to discuss the company's earnings fine print. Thanks a lot, Mr. Jalan, for joining in. Always a pleasure speaking with you. You have spoken about, possible recovery in the second half of this year, wanting to do double-digit growth in this year itself. Just wanted to understand if you could give us a sense, a quantifiable sense, of what were the price hikes that were taken in the second quarter so far? How has demand panned out? And what's the expected growth this year? I mean, a little more specific than just double digit?
Well, the overall price hikes that have been taken in two tranches, some has happened in the latter part of July, and some is happening as we speak. So I think the combined effect of these price hikes is about 2% on a weighted average basis across the product portfolio. So this should help in improving gross margins for the entire industry. As you know, the last two quarters have been fairly muted for the paint industry in terms of top-line growth. We have seen a very good bounce back in the month of July. Of a kind that we have not witnessed in any single month during the last 7-8 months. Now, is this demand bounce back going to sustain itself going forward in the quarter? I really don't know, Mangalam. We have to keep our fingers crossed and wait and watch. These are headwinds that the entire consumer-facing sector is experiencing, and people are talking about green shoots of recovery. We'll have to wait for another couple of months before the verdict is out whether the demand has bounced back or not to its more normal levels.
All right. Would you be able to quantify the kind of growth that you saw in July over previous July? You said it was the kind that you've never seen in a very long time. On the revenue as well.
It's been in the high teens in terms of percentage.
All right.
But whether it will sustain in August or September is something that we have to wait and watch. We sincerely hope that it will improve further as we go forward, and that's all we can say at this point in time.
All right. Hi, Mr. Jalan. Good morning, and thanks a lot for joining in. Well, these price hikes will cushion the margins. So by how many basis points will it improve? And what about the EBITDA margins? Could you give us a sense in terms of how that shapes up?
So, as I said, the price hikes are approximately 2% across the board. So you would expect, on a Y-on-Y basis, margins to correct by, at least the gross margins to correct by roughly 2 percentage points, all other things being equal. As far as EBITDA margin is concerned, our EBITDA margin showed a marginal decline in Q1. That was more because we had significantly ramped up our sales force size in Q2 of last year. So coming off a low manpower cost base in Q1, the manpower costs were about 23 to 24% higher, and that certainly impacted the EBITDA margins. Had the top line growth been much healthier, let's say in the mid-teens or around 20%, all this would have got comfortably absorbed. But going forward, when we move into Q2, this aberration of increase in manpower cost will no longer be valid. And therefore, we expect healthy EBITDA margins coming back in Q2.
Well, along with that, you'll also have, the leveraging of ad spends. Even as your ad spends have remained almost the same at an absolute level, if not grown, as a proportion of sales, they've come down. Do you have any, inkling on what sort of band does it settle in? I mean, it's a wide range for the entire industry. The leader has about 2 to 3%. Then there are people 4 to 5%. Then the new entrants do about 20% as well. You're somewhere around 7-8%. Where does that settle for you?
7 to 8%. We'd expect a marginal decline year on year for the full year. It's difficult to judge this on a quarterly basis because the ad spends are not uniform throughout the year. So, typically June, July, August are low months of advertising. We had a high advertising during IPL season in April and May. And advertising will certainly come back with a bang in September and October before the festive season. But if you look at the whole year, then as a percentage, I think it should drop by maybe a percentage or something close to that. So we were at around 7.5%, 8% last year. Maybe we'll be closer to 7% this year as a percentage of top line. So that should also aid EBITDA margins for the full year.
All right, Mr. Jalan, before we let you go, I have to ask you about the market share. I recall the last time we chatted as well, you were very confident. You said that y'all have your place over there. Y'all will hold on and grow onto your market share. Now, post the entry of the Bidlas, how do you see that the paint market dynamics have changed? And also from around 3%, where's your market share now?
No, it's very difficult to quantify these things on a quarter-on-quarter basis. Obviously, if top line growth has been outpacing the industry, and this is the 5th quarter in a row that we have outpaced the industry growth by a significant margin, obviously we are gaining some market share. As far as the new incumbent of Birla is concerned, so far, at least we have seen zero impact on our sales with the entry of the new incumbent. And that has not come as a surprise to us. We have been saying that regularly, that irrespective of how they execute and how they ramp up, it will be a very long time before they start impacting the top line or the bottom line of any of the existing players. So we're not too worried about that at this point in time.
3% is where you are in the market share, or a little more or less than that?
Around that much, around that.
And in the next 3 years, where is it headed?
That's a very difficult forecast to make.
There's an aspiration, sir. You can give us your aspiration.
We can inch up to around 5% in the next few years. That would be an ambitious target and possibly achievable too.
We appreciate you joining in and filling us in with that guidance, sir. We wish you all the best, and we look forward to having a chat with you at the end of the coming quarter as well. Thanks a lot for joining in.
Thank you. Thank you.
Well, for the time being, let's get back to that story that was flashing for you on the screens at the start of the show itself. Sapna joins us to fill us in with the government's latest plans on Hindustan Zinc. Sapna, morning.
Hi, Nigel. So, yes, that's right. Government is reassessing its plan to come up with the OFS as far as its stake in HZL is concerned. Now, for various reasons over the last year and a half or 2 odd years, there had been issues with the Vedanta group which have now been ironed out to an extent. So possibly, if not by the current calendar year, definitely before the financial year closes, the government does plan to come up with an OFS as far as HZL is concerned. It could be a small tranche of 2.5 to 5%. That call remains to be seen, because at the moment the government is not looking they don't want to do stake dilutions in a very aggressive manner, even through OFSs. So that message is loud and clear. So depending on valuations and what kind of demand comes up, what kind of advice they get from the transaction advisors, they'll work this out. But this is 100% a sure shot. So we have to look forward to this. It remains to be seen. It's a big chunk, 29% plus. So if you do a 2.5 to 5%, government is will still hold substantial stake in the company post that. So I suppose this is something that will progress over the next 3 to 4 odd years. Again, of course, depending on the market situation. So this is the update as of now, Nigel.
Got it, Sapna. Thanks a lot for that. The government holds roughly 30% stake in this company. Vedanta holds bulk of it at around 65%. The quantum, the pricing is something that we're looking at. For the time being, it appears that they'll raise close to around 5,000 crores if they dilute close to around 2% in the company. Let's see how that goes. For the time being, we slip into a short break. On the other side, Kumar Infraprojects is the company we'll be addressing.
Bunch of discretionary names, they've bounced back. We have Jubilant Foodworks at the high point. Along with that, PVR Inox, United Spirits itself is at an all-time high, and ABF Fashion and Retail, all of them doing extremely well. So we'll keep an eye out on this space as we go along. Demand has recovered in the second half of this year, or expected to recover in the second half of this year itself. But let's talk about the infra space as well. Kumar Infraprojects is the company on our radar. The shares higher on the back of their strong earnings, marked by nearly 19% jump in the profit after tax. We have the management of the company joining in, the Managing Director Kamal Gupta, to detail the earnings fine print. Thanks a lot, Mr. Gupta, for joining in. I mean, if we're looking at the first quarter performance, most of the infra peers were impacted by heat wave, elections and low activity in general. In that, you've done close to around 13% in terms of revenue growth. Have you seen a pickup in the second quarter? And to that extent, what's your expectation for this full year?
Yeah, good morning. So I'm happy to share we had another healthy quarter, Mangalam. And all our projects are on track and going on in full swing. So as you know, as you rightly told, we had a 13% growth year on year as compared to last year in revenue, and our net profit also has gone up by 19% to 86 crores. For this current year and the current quarter also, all the projects are very much on track, and we expect a similar growth on last year, around 13 to 16%. And for the whole year, we are looking for a revenue of around 5,600 to 5,700 crores, which will be 15% plus as compared to last year. And our order book as on 30th June stands at 19,850 crores. So we are looking for around 6,000 to 8,000 crores of projects in flow in the coming year.
All right. Hi, Mr. Gupta. Good morning, and always good to see you win. 6,000 to 7,000 crores is what you're looking at in terms of inflow. For the first quarter, what was it? If you could quantify that number. And also, what's your L1 book as of now?
So we are, Nigel, we are L1 in around 6,550 crores of projects. Okay. This includes the two projects of multi-model corridor from Virar to Alibag, one project of elevated corridor from Mulund to Thane, that is Ananagar to Saket, 1,800. So these projects all we are expecting to get converted in later this month or early next month. And yeah, so my order flow was inflow. Order inflow means we are L1 in around 6,500 crores of projects, and this will be converted in a month's time. So this will add up to our order book.
All right, but you are expecting 6,000 to 8,000 crore inflow in this year, of which you are L1 in 6,500 crores already. So if you could give us a sense of the bid pipeline, What are the likely bids that you'll be making in the remainder of this year, and what could the possible wins be?
So we already bidded for around 2,000 crore projects, apart from the L1 numbers. And as we have given a conservative figure of around 6 to 8,000 crores of inflow in this year. Of course, this looks to be easily achievable, and we will surpass our guidance. So as J. Kumar has decided to be a $1 billion revenue company by FY27. We did 25,000 crores of order book at that time. So we are very much on track on this, and we are confident of achieving it and surpassing these numbers.
Mr. Gupta, various infra players, they as well were looking at the Japanese market and in fact borrowing from there. And now we know that entire yen carry trade has entirely reversed. Could you give us your comments on it? Have you noticed that a large proportion of your infra players or your peers could have done that? And will it have a ripple effect on our infra space here?
So we had never gone for Japanese funding, Nigel. And I think we have a healthy balance sheet, which does not require us to go to any other place apart from Indian banks. And overall, of course, Japanese funding is there for India also. JICA is funding for a lot of major projects, whether it's the bullet train from Mumbai to Ahmedabad or the metro projects. And we are basically EPC players. So, for us, we don't have to go for equity funding. So on our balance sheet or bottom line, there's no impact at all.
Got it. No, that's not for you. We was just trying to figure out what could be the impact in terms of the entire industry. What could, according to you, be the borrowings in yen for the entire infra industry? Would you have that number handy?
No, I'm sorry. I won't be able to comment on that, Mangalam.
All right. Okay. So let's talk about your business itself then. Your margins. Last time you had said that you're targeting margins of almost 17%. You've done 14.5% for the first quarter. What's your target for the entire year, and how do you get there?
Yeah, we have done 14.34% this quarter. And as we have given a guidance before also, our EBITDA margin is in the range of 14 to 15% since last 4-5 years. And we are intending in 6 to 8 quarters to increase these margins to 15 to 16%.
Okay. All right, Mr. Gupta, we appreciate you joining in. Wishing you all the best as you move towards that $1 billion mark of a target by 2027. Keep up the good work and keep the pace going with regard to all the activity here in Mumbai. For the time being, we'll slip in a short break, come back. We'll continue to focus on markets and stock-specific action. Welcome back. As promised, let's get you a few ideas for profit from Money Control Pro. That's our special segment, and we have Sachin Pal who's joining us to fill us in with just that. Sachin?
Logistics company Transport Corporation of India delivered a steady set of numbers in the first quarter of FY25, with the revenue growth of almost 10% year-on-year, driven by a broad-based growth across its 3 business verticals. Margins, on the other hand, were under some pressure and declined by almost 60 basis points, mainly attributed to the increase in operating costs. The freight business of the company, which generates the largest revenues within the 3 business verticals, grew at a steady pace despite lackluster demand trends in the capital goods and the infrastructure sector. The company is facing some competitive challenges within the sector, primarily due to capacity addition by the larger players. The supply chain business, on the other hand, continues to remain at a very strong footing and grew by almost 12% year-on-year. The company continues to add new clientele and diversify its revenue base away from the automotive sector. The CVL business also grew almost 14% year-on-year, which was the fastest among the 3 business verticals. In fact, the company is looking forward to add 2 new ships to its fleet by the end of 2026, which should give a big fillip to its volumes as well as margins in the next 2 to 3 years. Overall, company continues to remain on a very strong footing and has outlined a capex of almost 350 to 400 crores for FY25, which is likely to be met through internal accruals. Well, at around 20 times 1 year forward earnings, TCI is a very investment bet for accumulation from a long-term standpoint.
All right, with that, we'll wrap up on this edition of Chartbusters. Thank you so much for watching. From all of us here at CNBC-TV18, the market's holding up well in the green. And at the top of your screen, instead of the markets this time around, is our leadership board on YouTube. And for that, we have to thank no one but you. Thank you for your patronage.